I got options, bitch, talking like Honda, Rachel, got some shit. I'ma get pushing cars on all my stocks. I has my shit vested in everything from value checks to dividends. Living in houses in the hills, my life is different. Businesses, I've been doing that since I was little, yeah. Bigger than that, I'm doing the same thing.
Hey guys, welcome to another video. And I want to do this video to explain what I think of the market going forward, where I think I see a retracement in the market, and why I think that and how that lines up. And before I start, I want to show you guys, for those that are new to the market, I want you guys to realize there's a direct correlation between the DXY, which is the US dollar index, and all the other indices, so oil, S&P 500, NASDAQ, Bitcoin. They all are inversely related to the dollar, okay? So this is a good example. The blue line here, the blue line is the dollar, and the black line is crude oil. So this is just one example. As you can see, as the dollar goes up, oil goes down, and you can see exactly, it's almost exactly correlated. And same thing here. It's almost identically correlated to Bitcoin, but I couldn't find a good graph of Bitcoin. But as you can see here, as we moved up, the dollar tanked. As the dollar moved up, the oil prices tanked, and that's just because there's an inverse relationship. If you dive into economics, um, it's more clear why that happens, but this isn't for that. So when I try to judge where the market is going in the next 2 weeks, in the next 3 weeks, I always look at the dollar, and then I look at the other indexes to see if there's a relationship. Okay, so when I go into the dollar index, and I see this, all right. So what I'm showing you here, these are called fib circles, all right. So anytime we hit a fib circle, so if we come here, anytime we hit a fib circle, hit the bottom of this fib circle, we ride the fib circle up. Same thing here, and we've done it all the way here. We hit the fib circle, support, support, and we also have another fib circle on the bottom, which is this one, which is also major support, right? So if we move out, that's a fib circle, okay? So what I think is gonna happen is we are gonna hit this fib circle. We're gonna hit this one. We're gonna have our way up. So when we hit this fib circle and we start moving up, all the other indexes will start coming down, right? Just how economics work, how the market works. And then if we move back, right? And let's say I turn all this off, right? So I delete all of this for now. All right, if we move back, we can see in simpler terms, we are making a descending wedge, right? So, and you guys know this is a bullish pattern, right? We saw it in the past couple of weekly watch lists where we made this and we had a very strong move to the upside. So that is a descending wedge, plain and simple. So now we see that the fib circles are lining up for a move to the upside. We are making a descending wedge for a move to the upside. And let's mark, so anytime we break this descending wedge, we'll have a nice move to the upside. Maybe like 5%, 6%, but that's a lot for the markets because a lot of the times the markets are very over exaggerated. We have big moves to the up and big moves to the down, especially in mid-sized low market cap stocks, which I think most of us play. Here, so let me get this fib circles back. Where I think we are gonna get the move to the upside, it's gonna be, so we can go to the 4 hour, and the maximum time for retracement here is, let's say, the apex when we start moving. That's the beginning of February, okay? Vertical line, beginning of February, all right? That is when I think we're going to start moving up and the other markets are going to start coming down. Make sense? So the dollar is looking like it's about to reverse to the upside. It's been getting beaten down for a very long time. All right, now let's move on to the Dow Jones. All right, so if we go back, same fib circles, right? I want to show you a lot of the time these markets, the the ones that are more algo driven, they all correlate very strongly to fib circles because that's just, I think, how a lot of the AIs are designed through Fibonacci numbers. So if we come back and we look at the fib circles, we see that this has been strong support, right? We had support, right? Resistance, support, right? Resistance, support, and then we come here. This is your resistance, and then we had the exact top here, right? You had your exact top here, and we had your resistance here, support here, support here, okay? And we also have this trend line, which has been acting as support and resistance the whole time, right? You see that support resistance on these two trend lines here. This one here, that's your support, resistance, 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 and then this one here is your support, supports, right? So this trend line has been support for a very long time, and now if you look at here, if you look here, we're starting to hit these trend lines, okay? So what I see from this is we are also here going up to this fib circle, right? This top of this ring, it's all of it is the exact same fib circle. So if I move this fib circle, you'll see that it's all the same, okay? You saw that we topped out on this fib circle here. So we topped out on this fib circle when it hit this fib circle and hit this resistance line. Well, if we look here, we're having the exact same pattern here. History likes to repeat itself. So what day is this? This is February 9th. Okay. So as you can see, it's all across almost the exact same week. So we're starting to see some correlation here, right? So if we see two things correlating, then that's more indication that what we're seeing is correct. Okay. I also see a gap here, which I've highlighted, and gaps are gaps get filled most of the time. So like I think 80 to 90% of the time, all gaps will get filled, especially for the larger indexes. If we move out and we look at the patterns that we see, we can see that here we formed an ascending wedge, right? So this is a bearish pattern. The dollar is forming a descending wedge, which is a bullish pattern. Here we formed a ascending wedge, and it breaks down to the downside for because this is bearish, you'll break down to the downside. This is just a coincidence that we also had a coronavirus outbreak and stuff, so we had a very exaggerated move to the downside, which corrected itself, right? Here we are forming a similar pattern. So if we take this move out and we extend it, see what we see. I take this and I extend it, and I take. Alright, so that's kind of a far way off. So we have this exact same pattern forming, ascending wedge, right? You see that? Same pattern. So let's make this one. Here we have two ascending wedges, right? So we had this ascending wedge, we broke to the downside, and we're using the same one, and we're building another ascending wedge. So if we go back, what we are seeing, so let's put the top of this. So if I go back, right? So here we are seeing two bearish things correlating. We are seeing a gap, right? Gaps are filled. We are seeing a very strong resistance point, which is going to be the 32,000-ish mark. We're seeing a gap that needs to be filled, and we're seeing an ascending wedge, right? So the dollar index is looking bullish. The dollar index is looking bullish because of the descending wedge that we're making, and because of this fib circles, right? This fib circle, we're gonna ride up. Maybe it doesn't have to be a market crash like what we had in March, but it'll be a nice retracement. I'm just looking for retracements because it's a good time to trade around your position. Okay, so now let's move to the S&P, right? So S&P, same ascending wedge that we see here, And look how beautifully this correlates to fib circles. So if we move back, we can see, so we can see we had support, resistance, support, resistance, and this trend line is also something like same in how in the Dow Jones we were having that trend line that was a very strong support resistance. Same thing here. We found support on the trend line, resistance here, then we found support here, then we had resistance, support on the trend line, and continuing, we had resistance on this trend line. We did a same ascending wedge here, so you could call this, so this line and this one, your ascending wedge, right? We broke to the downside, and then we're forming the same ascending wedge here. So we're taking the old previous support resistance level. So this trend line proved itself, right? We had your support here, we broke down, you broke underneath it, now it's turned into resistance, and it'll turn into resistance again here. So we're forming a bearish pattern, and you see how here we caught the top on this fib circle caught the exact, almost exact top. We're coming up to the next fib circle, which will be a very strong resistance point. Combine that with the top of a ascending wedge, right? And we're having our trend lines forming an ascending wedge. It's all looking like we need a retracement. We don't need a market crash, we just need a retracement, right? So if we go back and I delete all this drawing. All right. I think we also have another trend line here that, so you see how here, see how this one looks. Just want to see if it's correlation all the way through. Yeah, so that's correlating all the way through. So you have here another resistance point here. So all in all, the dollar's looking bullish, the Dow Jones is looking, and the S&P is both looking bearish because of we're making an ascending wedge. All the fib circles are lining up for a very strong resistance point. The fib circles have proven themselves to catch the top and the bottoms multiple times, right? So how do you trade around this, right? Well, we know around when we're gonna hit it. We're gonna hit it around February, first week, second week of February, right? So before that time, we're gonna have a very bullish move. The dollar is gonna keep like sinking, and the markets are gonna keep going up because there's an inverse relationship, like I said. And what we want to do is we want to start taking profit off the table, right? We're gonna start taking profit off the table, and when we see this happening, when we start seeing this reversal, then we're gonna look. We're not gonna try to catch the bottom on the S&P or the Dow Jones. We're gonna try to catch. We're gonna try to look at the dollar index to see if we're topping or not. And when we start seeing a topping on the dollar, then we'll go bullish on all the stocks that we want to go bullish on. Maybe the mid caps, small caps, but we don't want to time. It's not about timing the market. It's about trading smart. We don't want to catch the exact top. We want to just start slowly taking away profits, and then when it does top, then we want to start looking for support when the dollar starts. So all we're doing is trading around the dollar because that's basically economics. Economics is um, the price of oil, gold, Bitcoin, everything is all related to the dollar. They're all hedges against inflation. Okay. So what I'm gonna start doing is I'm gonna start taking away profit off the table. Everybody made money in this bull market. We had a beauty bull market, but the reason the dollar kept tanking was because Biden is gonna start printing money like crazy. That's not instantly. He's not instantly gonna start printing money. So we're gonna see the dollar's gonna go up before it comes down. Okay, so sure, if you hold long, you're gonna be fine. But if you start trading around that position, if let's say you sell 10% up and you buy 10% lower, now you can now you have a bigger position relative to what you had before. So I'm not saying we're tanking. I'm just saying we're due for a retracement around the first week of February. So I hope you guys trade safe, trade smart, and if you have any questions, please leave it below. I'll keep you guys updated. And thank you. Have a good one. Peace.